Let me give you a little bit of background of how Dennis and I came to be working together, the nature of our business relationship, and pretty much everyone who you're going to meet today will have several people in here, and it's important to me that you understand what our business is. The first thing I always like to point out is that I've never received any kind of compensation, kickback, partnership, referral fees from Dennis. I've never received a check from Dennis or his companies. So one of the things I kind of like to explain is the K through 12 version of what Dennis does. Okay, so many of you have IRAs or 401ks right now, traditional, not self-directed. Where is the money sitting? Right? When it's invested, it goes out and it's with those different companies. But if it's not invested, it just sits in somebody's trust account, doesn't it? The only difference between what Dennis does and the self-directed IRA industry and those companies do is they put your money in their trust account and then they invest it. Dennis puts your money in his trust account and then you invest it. That's the only difference. Okay? Does that make sense? That's somebody at Merrill Lynch makes decisions. Maybe they talk to you. You say, I want to go conservative. I want to go aggressive. I want to be in cash. You have some control. 100% of the control you have with a self-directed IRA. That's the most basic breakdown of how and why it works. Because I've had people say, well, I thought it was I thought I was borrowing against it, or I thought I was cashing out. It's none of those things. And Dennis is very good at explaining that. So just like Merrill Lynch and Fidelity are competitors with each other, Dennis has competitors in the industry. Some of his competitors are companies like Preferred Trust, other trust companies who allow investors to self-direct their money. Make sense? Now, I have worked with a lot of those other companies. I have clients who already had relationships with those companies. Does anyone already have a self-directed IRA set up? Okay, so who's the Preferred Trust? Okay, I've known Preferred Trust out of Las Vegas for several years. Kurt Weinrich, good organization, and the one difference that I had found between Preferred and Dennis is a much higher fee structure with Preferred. Other than that, we have clients who we send money to Preferred Trust every month. You guys have one set up also? With who? Okay, I'm not familiar with them. Right?
Yeah, they're also in Nevada.
Oh, they are Nevada. Okay. Probably the biggest would be who? Maybe.
Well, it's the biggest probably Equity Trust.
Yeah, Equity Trust.
Equity Trust companies in the West Coast.
Now, Dennis would never say it, but since I always will, give you my K-12 version, the biggest criticism that I've had with other trust companies that I've never had with Dennis is the turnaround time. I call Entrust or I call Equity Trust, and a grunt calls me back a couple days later, and it takes me a while to get my money. I've had people get really frustrated because maybe I call them and say, hey, we just got an amazing deal, and they can't get a check for a week. That's one of the biggest criticisms that I hear. So one of the things that we love about Dennis and why I like to work with him is because his fee structure is as competitive as any that I've seen. And he's going to go through that today. It's very cheap to set this up. It's very cheap to do transactions within it. He's got multiple products. But the biggest single reason why we work with Dennis is because for 30 years he was in publishing. He's written 5 books, 12 books. I've read 5 of them. But the kind of publishing that he did was very distinct. And it was publishing for financial services. So Dennis wrote the books that the Merrill Lynch financial planner had to read to get his license for a financial planner. You with me? Right. Very technical, knowledgeable books. So imagine the understanding and the knowledge that Dennis has about this industry. Maybe some of you listen to this today and you go back to your accountant and you say, hey, what do you think of this? We had that happen with last month. We had an investor. He's very savvy. He works for a pharmaceutical company. He makes $600,000 a year. He went and talked to his accountant, and his accountant said, oh, yeah, you don't want to mess with that. That's risky. And he called me, and he said, Aaron, this is what my accountant says. And I said, yeah, go ask him how many clients he has that he works with that have self-directed IRAs. And he came back and he said he doesn't have any. And I said, well, this is risky equals I'm ignorant to this. I don't want to deal with this. Make sense? That's a front that many professionals use to hide their ignorance. So we see that. That's very common. We see people do the same thing with a financial planner. What do you think about this? I'm thinking about doing a self-directed IRA. I'm thinking about buying some real estate. Oh, you don't want to do that. That's risky. What is that code for? Don't take the money away from me because I can't make any money if you self-direct it. Okay? So it's important that you, just like we were talking about yesterday, it's important that you really understand what the motivation is when somebody gives you advice, and that you as the investor listen to both sides, weigh it out, and go with what resonates with you. That's the advice that we always give. The last thing that I want to say before I let Dennis chat, and really do take the full hour, okay? Because I usually cut 15 minutes into his hour, and then he's rushing. Yeah, don't rush. Is that Dennis has a corporate structure in Chicago, and they have over half $500 million, getting close to $500 million. He got set up as a bank. He spent a ton of money. He jumped through a lot of hoops. He had a lot of approvals that he had to do. It's very difficult to get set up as a bank. He's done that. That should speak to his credibility, his accountability, his integrity. It's very hard to do. A lot of other trust companies out there just utilize somebody else to be their bank when they hold your money. Dennis has done that. But his corporate structure is very compressed. I have never emailed Dennis and asked him to call me where I don't hear from him the same day. That's really, really important to me. And I've never heard feedback once from our investors that they've had a struggle with communication with his company. And that's the most common complaint that I hear from other companies, and that's why we work with him. So we said to Dennis, we'd love to have you come to our bus tour every month. I would be happy for my clients to work with you. I don't ever want a penny from you in compensation, because if at some time we feel like you're not giving that service, then I'll just say, hey, thanks, but no thanks, we're going to go with somebody else. Because that's how you should work with your power team. That's how you should work with the people, whether it's your contractor, your insurance guy. You just say, hey, I love working with you as long as it works for both of us. When that changes, then we won't work together anymore. And I'm always very upfront about that. And so I don't want to get into some messy kickback scheme where you give him 1,000 and he gives me 200. That doesn't happen, because it maintains the integrity of our relationship. So without any further ado, Dennis Blitz.
Okay. During the morning, I'm going to ask, or I'm going to pass this around, and it's just for people who would like to meet. If you've got a specific question, or if you've got, you want to start an account, just jot your name down, and we'll, get together with you privately, one-on-one. Everybody has, personal questions or things like that. If you don't think this is for you right now, but it will be for you in the future, that's great. But let's not book a meeting today, because I want to deal with the people that are kind of, need the activity or the attention right now. We'll just leave me a note, and we'll call you at the office, or we'll call you at any time and answer any questions that you have. Typically, I start out with the presentation. Jennifer, I didn't see you back there. Hello. How many times have you heard my presentation? A dozen? A lot? The next time you can give it. All right. My name is Dennis Blitz. As Aaron said, I've written 12 books on financial topics and financial regulation. They're always on regulation. They're always on taxation of financial products and financial matters. And they're technical books. They're not really the types of things that you would read for pleasure by any stretch. I'm the president of the IRA Club. The important thing here is this line down at the bottom, that I've had 5,000 opportunities to sit and talk one-on-one with people about their IRA. And after you talk with 5,000 people, a lot of people, you learn a lot about what it is that they are thinking. You learn a lot about what the opportunities are and ways to respond to them. So we've kind of been down this path. I'm going to talk about the fact that everything you're going to learn here, and how many people are kind of Rich Dad associated people? Several of you? A lot of you? Okay, great. Everything you're going to learn here, everything you're going to learn at Rich Dad really breaks down, especially at Rich Dad, to two categories. And the two categories are work and investing. Everything you're going to do, well, I'll wait until they get done rattling. Okay, I think they're done rattling. Okay, everything we're going to talk about is going to be either work or investing, and those are the only two categories. All right, let's do this. Work. What's work? Okay, you're going to take classes at Rich Dad probably about wholesaling, right? That's work. Buy, fix, flip, if you do the work yourself, is work. It's okay. It's great work. You know, it can be very profitable. Your career, of course, is work. Right? What's investing? Investing is buy and hold real estate. Buy, fix, flip when somebody else is doing the work. Lending money. Tax liens. Okay? So you kind of see the difference. One, you're involved with doing it. You know, you get up in the morning and you do it or it doesn't get done. The other one, you do it and somebody else really helps it move forward. You know, the tenant keeps paying the rent type thing. Okay? The difference for us is the way the government looks at them. Work, you earn the money now, you can spend the money now, you do whatever you want with the dollars, and that's a good thing, right? We all have to live. We all have living expenses. Of course, the income is 100% taxable. That's it. You've all had a job, we've all lived that way. Investing, the earnings can be 100% taxable, or the earnings could all be tax deferred if you want to do it inside your IRA, or it could be 100% tax free if you want to do it inside of a Roth IRA. In other words, the difference between work and investing is investing, you will always have the money available to you now, and you will be able to, but you will be taxed on it now. Investing, you choose the tax structure you want because you're investing for your future. And the government gives you a lot of encouragement to invest for your future. Okay. So again, with investing, you choose the way you want to be taxed. So I want to talk about something that I haven't talked about before, and this comes about because of a presentation that I found myself doing a couple of weeks ago. Pardon me. I was on a panel put together by some financial planners, and they called in myself and a couple other people in the self-directed IRA industry to have a very studious discussion on what is the optimal investment for a self-directed IRA. Let's get to the bottom and find the optimal investment. Okay. So I put together, and what they wanted us to discuss the 3, 4, or 5 most successful self-directed IRA accounts that we had. I did, a couple of the other people did. And I put together the slides about the 3 or 4 most successful I had. They put together their 3 or 4 most successful people. I will tell you at the discussion, we talked about people with $100 million IRAs, $200 million IRAs, and $300 million IRAs, outstandingly big IRAs. I am not here to tell you that you're going to have a $400 million IRA, okay? Ain't going to happen, right? Could, but buy a lottery ticket because that could happen too, right? It's pretty rare. However, the other thing that you notice was every one of those investments was radically different. Radically different. So if they were sitting in that audience trying to figure out, well, what's the best investment, they walked away pretty frustrated. I'll give you an example of one of the slides that I had. It was a guy with a little over $30 million in his IRA. Big IRA, $30 million. And he is by profession a geologist. And about 10 years ago, when his IRA was pretty well decimated, he moved it from the stock market to a self-directed IRA because he said, I don't like the stock market. Well, of course, he's just going through the dot-com bust that a lot of us went through and wiped out half our monies, right? He took action. He started a self-directed IRA, and he said, I hear you can do, I can make my own investment decisions. I understand mineral rights. That's what I do all day long is I worry about mineral rights for big companies. I've made lots of money for big companies helping them determine the quality of the mineral rights they own. So what did he do with his self-directed IRA? He started buying options on mineral rights. Now, He's got about a $30 million IRA today. Now, at this point, there are people who are going to stop and say, hence, you should invest your IRA in mineral rights. Right? And you know, you've been to that seminar, right? Okay? Right? So I got a question. I've got all this evidence. I've got all this paperwork. I've got all this paper trail. Should I invest my IRA in mineral rights? Of course not. For the simple reason that I don't know anything about mineral rights. Okay? So when we looked at all those slides, the guys who have 100 million and the guy 30 million and the guy 20 million, big IRAs, there was a thread, a very strong coordinating thread of what was the best investment. And the best investment every time was the guy was investing in what he knew and understood. That was it. It didn't matter. I shouldn't invest in mineral rights. I got a guy who I've had for years who invests in ag land. He's done wonderfully. We're talking a $20 million IRA. He grew up on a farm. He lives on a farm. He invests in ag land, agricultural land. Should I do that? I don't know a cow from a pig. I don't know, you know, if you took me to a farm, I couldn't tell you if that was corn or wheat or soybean. Something's growing, I don't know what it is. So the point is, the right investment, we know time after time, is invest in what you know and understand. If anybody has an idea for you and you say, you know what, I'm not comfortable with that topic, I don't care how good it sounds, don't invest in it. Invest in what you know. So if you know and understand, buy a house, rent a house, collect the rent, that is the best investment. So as you're taking your Rich Dad courses, as you're here, when you hear that investment that just makes sense, that's the investment that you want in your IRA. Okay, so that's what I want to talk about. But I want to talk about one specific account who wasn't on my list of biggest accounts. I want to talk about these people. Yep, hello. Hit the right button. Okay. Went the wrong way. There we go. Okay, so productive IRA is important to everyone. Oh, by the way, remember I said I got a farmer with a $20 million IRA, $23 million in his IRA. Let me show him to you. It's him. Let me tell you, he lives in downstate Illinois. Last summer, he called me up. He'd never been to the office. He never met me. We talked on the phone. His name was Walter. So he called me up, and he said, I'm going to be in Chicago. I want to stop by. So he came. So Walter came to the office, and I don't know if you can see the photo of him there. He's got his Bermuda shorts. He's got his camera hanging around his neck. I said to him when he walked in, at least you don't look like a tourist. You know? So I'll tell you this. I had lunch with this guy, spent a couple hours with him, and let me say that if he could have $20 million in his IRA, anybody can have $20 million in their IRA, okay? You ain't got to be Albert Einstein. You got to invest in what you know and understand. So here we go. We're going to talk about these people here. In most cases, you're still going to work for a living. Now, your career may be a job, or it may be as an investor, but you're still going to work because you still have to pay the current bills, eat, support yourself. We all have to, okay? Still going to have a career. The IRA does not replace your career. An IRA is additive to your career. The idea is you want a productive IRA to be working for you. Now, a lot of us have IRAs that are just sitting. That's pretty frustrating, right? Why is it just sitting? Well, it's because of our own lack of knowing what to do. We're going to hopefully we'll address that issue. I want to talk about these two people, Mark and Penny. Mark is a freelance writer. Penny is a full-time mother and a work-at-home graphic artist. Nice people. They are not my 4 or 5 largest accounts, but I think they're really the poster child. They started a self-directed IRA in 2005. The goal was to invest their IRAs, hers and his, in what they know and understand. And they said to me, they didn't say to me, I never asked them. They knew what they knew and understand was residential real estate and making some loans, right? Hard money lending. How did they know about hard money lending? Because they borrowed some, they learned it, kind of found out about it, weren't real knowledgeable, but they said, hey, this makes sense. Is there anybody here who doesn't think you can make money with hard money lending? If there's anybody here who doesn't think you can make money with hard money lending, I have advice. Go out and borrow some. Tomorrow morning, you're going to walk around saying, you can make money being a hard money lender. Okay, that's them. He says, it was a slow start till we got past the learning curve. But for the past several years, we're earning a little over 1% a month in our IRA. By the end of this year, our IRAs will have about $400,000. By the way, they are Roth. Okay. No big deal. If you have that scenario, how much is your IRA earning a month? $4,000, right? $400,000 IRA makes about 1% a month. It's making $4,000 a month. This was his comment. It's like our IRA has become a third wage earner in our house. We don't touch it. It's like the wage earner is working tax-free exclusively for our retirement. And that's all we're talking about. We're not talking about stopping working. We're not talking about stopping investing. We're just saying every one of us can add a third wage earner to our house and pay no income tax on those wages. Okay. Our goal today is to make our existing IRAs or old 401ks into the third wage earner. These people are young. They're going to have a lot more than $4,000 a month coming in at some point. Okay. I put this in here because of a comment that I hear at least 3 or 4 times a week. Somebody says to me, I'm going to work till I die. I only hear that 3 or 4 times a week. And every time I hear it, I say, okay. But what I'm really thinking is, no, he's not. You know, what's going on when a person says that? It's fear talking. It's the fact that he just woke up one day and the money and the numbers started to come together in his head, and he realized there's not enough money for him to retire on. And he realized the only option he has is to work till he dies. And I want to say to him, okay, sure, but let me ask a question. Is that what you really want to do? Is there anybody you know that wants to work until the day they die? I'm going to learn to invest in real estate and work till I die. I hear that all the time. Yeah. Anybody here want to be 85 years old, walking through yet one more house saying, I think we need a new toilet? I don't think so. And that's what we want to what we want to address with this. Okay, here we go. Enough of that. Let's begin. The class is starting now. Can my IRA own investment real estate? Yes. Thank you. One person. Were you my loud yes, sir? Who was my loud yes, sir? Yes, yes. Okay, good. Okay. Can my IRA buy and sell investment real estate with no income tax? Yes. And if there's anything that is the magic sauce, the secret sauce of the self-directed IRA, this may be it. Right? If the people on this side of the room buy a house with their personal dollars, what we call non-qualified dollars just means they're not qualified for special tax treatment. People on this side of the room buy a house out of their pocket as an investor, non-qualified dollars, and 6 weeks later they find a buyer and they sell that house, earn a profit, okay? They're happy. These people on this side of the room, same house, 6 weeks later they find a buyer, nice profit, but they bought it in their IRA. What's the difference? These people will pay income tax on the earnings. These people will have all of that money available to roll into the next investment. The compounding effect of making exactly the same investments, profitable investments, inside of an IRA is dramatic because you have all that money left to make the next investment and the next and the next and the next. So the compounding effect is dramatic inside of a self-directed IRA. Okay? Yeah, yeah. And you... No, you're not, because you had to tax whatever your paycheck is taxed at plus the earnings that you got on that house. You just took up your bracket. No, you go into another bracket. You go to a higher bracket. Okay, so if I transfer money from my current IRA or 401k, is there income tax? I hear this all the time, and is there? It is a tax-free exchange. It's called a trustee-to-trustee transfer, and trustee-to-trustee transfers have no income tax effect. How many trustee-to-trustee transfers can you make? As many as you like. There's no restriction. If you transferred your Fidelity IRA to our company, and 3 weeks later you said, I don't like them, I want to be in mutual funds, okay? You could. And you want to transfer not to Fidelity, now you want to transfer to Charles Schwab. Are you allowed to? Sure. Trustee-to-trustee transfers are unlimited, and they're not a taxable event. Okay. How can I put money into a self-directed IRA? An IRA may be transferred into a self-directed IRA from your traditional IRA that you have right now, from a Roth IRA, from an inherited IRA, from an old 401k, from any one of the other employer-based plans, except pensions. Pensions don't, but all the other plans, 457s, 503s, 403bs, all those are transferable. Oh, TSP if you're no longer with the government once you leave. Okay. Any IRA can be transferred to a self-directed IRA plus the retirement plans like your old 401k, your old 403b, your old 503b, etc. The notice here, it should say, it does say, old. The number one question I'm going to get this afternoon is, I want to do this, but I'm still working for the employer, and I have all this money tied up in this 401k. I think I'd be better off self-directing it. Can I transfer it? And I will tell you about 98% of the time the answer is no. It stays with your employer as long as you're with the employer. I said about 98%. There's about 2.5% of the employer-based plans that allow what's called in-service transfer, that allow you to transfer out. So if you happen to be with a company, so I never want to say no, absolutely. I always want to say check to see if your company allows in-service transfer, because if it does, then you can transfer it. But if the company doesn't have in-service transfer written into the contract, I'm sorry, we're willing to take it, you're willing to move it, they're not willing to let it go. Okay? All right. So, talk to 5,000 people. Let me ask a question. Let me tell you what I find over and over again. I find people who say, I have an IRA, it's not doing anything, I don't know why I even have it, I don't like it, it's not going anywhere, it's never going to cover my retirement needs. I have an old 401k, I think, I'm not sure, I don't know how much is in it, I'm not sure where I left it. I hear that all the time. And why are these people so discouraged? Well, they're discouraged because they have what we end up jokingly call pieces and parts. Because that's what it is. This is what the retirement plan looks like. We see this every day. Old money here, old money there, a little money here, a little money there. Of course they're unhappy. I agree they're unhappy. And why? Because each of these accounts is probably small enough that it's not requiring their attention. It's not making you focus on that money. It's a little here, it's a little there, it's not too meaningful. The second thing about it is, it's in a place where it is very restricted to the way it can be used. Right? You're at a major brokerage firm. What can you invest in? The things that firm offers. And you say, I want to buy a piece of real estate because I think that's a good investment. Well, if Merrill Lynch doesn't make money from selling you buying real estate, guess what? It won't go into one of their IRA accounts. Okay? So the first thing we want to do is this. Let's transfer the dollars into a single account. And that account will be a self-directed IRA account. If this is all we did, we've accomplished a lot. What did we accomplish? Two things. Number one, we have taken the pieces and parts and put them into a meaningful sum of money. And number two, we've put them into a very liquid state, usable state, flexible state, so you can decide on the investment that you want. And if we stopped right there, and if we did nothing else, we've accomplished a great deal. Here we are. We take the pieces and parts and put them together into a self-directed IRA. So now, again, we've created the dollars into a usable sum that's going to have your attention, and in a self-directed IRA so that it's usable for the things that you want to use to invest in. All right, step one. If that's all we did, like we said, we've accomplished a great deal. But we're going to go on now and supercharge this. Here we go. We can, and we don't have to, go to a next step. And the next step is this. Form a investment company, a private investment company, that is owned by your self-directed IRA. Now, this may sound a bit exotic. This may sound a bit different. But it's not. I'm going to ask a question. Don't even bother answering because I know the answer. It's 100%. How many people in here have either had an IRA or a 401k that at one time or another invested in a mutual fund? Everybody. We all did. I did. We all did. When you invested your IRA into a mutual fund, what were you investing in? An investment company, right? Who's managing that investment company? Some guy you never met. What was his number one goal? To keep your money as long as he could, because he gets a percentage of the dollars under management, right? That was his goal. Keep your money as long as he could. His goal wasn't make you as much as he possibly could. His goal had almost nothing to do with you or me. It was keep this alive, because that's how I get paid. This investment company will be different. Private investment company. It's going to be managed by you. Your goal is going to be based on your needs. So this investment company here, we're going to give it a name. We're going to call it the Great Lakes Investment Company. It's going to have its own LLC. The Great Lakes Investment Company will be owned by your IRA, not by you. Why do we want it owned by your IRA and not by you? Because the IRA earnings are tax-deferred or tax-free. So we don't want it owned by you. You as an individual are a taxable entity. Your IRA is not. So let's just make the owner the IRA. The manager is going to be you, because we want you to make your own investment selections. It's that simple. Okay? So, Great Lakes Investment Company, owned by your IRA, managed by you. What happens as a practical matter? As a practical matter, and we do this every week, every day, the guy talks to us at one point or another. He's got pieces and parts. We convert those into, because I've got to do something. I've got to do something. I've got to do something. And everybody cuts to that point at a different point. You know, some people say that when they're 20, some people when they're 30, some people when they're 40. Every now and then I get somebody that are in their late 70s. I've got to do something. Okay, right, I understand. Okay. So he goes from, he's got pieces and parts. We form the self-directed IRA, transfer in the dollars. We form an investment company. The investment company is owned by the IRA, so who will invest in the investment company? The IRA. Do you invest in the investment company? Mm-mm. You don't own the investment company. The IRA will invest in the investment company. So that's all the IRA money in there, and you're managing it. So you drive down the street, and you see a house, and you say, that house, I understand buying a house, renting out a house, collecting the rent. I understand that. That makes sense. So you see a house, that'd be a great investment for my IRA. And so you buy the house. You're the manager. You select the house. You buy the house, but you buy it in the name of Great Lakes Investment Company. And then we look at your account, and it looks like, whoops, there's the money that's going in. I've skipped a step. And it looks like that. Okay. Now, let me ask a question. By the way, how long does this take? I can tell you, on average, it's about 70 days. About 70 days. So 60 to 70 days. This guy, within about 60 to 70 days, went from here to having a house, from pieces and parts to having a piece of rental income property in his IRA. Is he happy? Yeah, he's pretty satisfied with himself. And he should be pretty satisfied with himself. He went from pieces and parts to something that's meaningful. Took him 60 to 70 days. The process, I can't tell you how often I talk to people who say, I've been thinking of moving my funds, but it's a hassle. This process is called a trustee-to-trustee transfer. It takes about 5 minutes on the phone. I can't tell you how many people will say, I've been thinking about this for 4 years. Thank you very much. I've been thinking about this for 4 years. But it's a hassle. And then they do it, and it's a 5-minute phone call. And they say, I don't know why I didn't do it before. Okay. Now, a year goes by, 2 years goes by, 3 years goes by. They buy the house, sell the house, buy the house, sell the do whatever. And we look at the guy after about 3 years, and the count looks like this. Oops. There it is. Now, on all those purchase and sales, how much taxes were paid? 0. Every time he made a purchase and sale, all the money was available for the next transaction. How much did he pay to the CPA to do all the accounting? There was no accounting. There's no tax filing, right? The IRA doesn't file a tax return. Okay? We talked, yeah, sorry? An LLC is, everyone here? Everyone here knows an LLC is what? A flow-through tax vehicle, and all the earnings flow through to the owner. Okay? So if I own an LLC, all the earnings would be on my 1040 form. Who owns this LLC? The IRA. The IRA doesn't file a tax return. Okay? Okay? So that's a good question. All right. Talked to this guy a few years later. We're in the 5th, 6th year. We have that. Is this guy happy? Is he proud of himself? As a matter of fact, if you invite him to a party, is he obnoxious? Yeah. Okay. So I can tell you I have a list of clients who are very happy and never get invited to parties. Want to be one of them? Okay. All right, here's the point. The point is 98%. That's a real number, by the way, 98%. That's not just a number out of a hat. 98% of the people are doing this. 2% are doing this. Okay. Mm-hmm. 10 million. There's no limit. I'm glad you asked that. Is there any limit to what I can do? We're going to come to the limits, but we're going to come to the limits on that in a second. Okay. Was that an itch, or did you have a question? Yeah, it was an itch. Okay, fine. Okay. So, all right. We're going to come to the limits. The answer is very few. Okay, so here we go. Who owns the property? The IRA. Pardon me, Great Lakes Investment Company, not you, okay? In what name is the property titled? Great Lakes Investment Company, in this case. You're going to, by the way, have your own name. Please don't use Great Lakes Investment Company. I will tell you, please do use Great Lakes Investment Company, because that's my IRA. I happen to use mine. So anybody wants to, go right ahead. Okay.
Oh, Dennis, we've had so many people ask us if they have to name it that.
You really had people that,
Do we have to name it Great Lakes Investment Company?
well, please do. I welcome that. Thank you. Okay. Who earns the rent? The Great Lakes Investment Company earns the rent. Who pays the cost of the ownership of the property? The owner of the property, right? So the owner of the property gets the rent. The owner of the property maintains the property, right? Pays the taxes, okay? Who gets the proceeds from the sale? The Great Lakes Investment Company. Who pays no income tax on the earnings? You. Okay. So, you'll select this format. We call it a checkbook IRA because you're going to have a checkbook for the Great Lakes Investment Company. You're the investment manager. You'll have the checkbook. These accounts are good for people who buy income-producing property. They're good for people who own several assets. The reason they're good for people who own several assets is we do not charge per asset, and we do not charge per value. So that guy who I showed you with the camera hanging around his neck with the $20 million IRA, he's paying the same price or the same fee that the guy who has the $10,000 IRA is paying. Okay? If you buy at auction, Aaron kind of alluded to this in a different way, and the way Aaron alluded to it is it takes time to get money from some IRA trustees. With a checkbook IRA, how long does it take for you to send the money? How long does it take for you to write the check? That's it. Okay? Every now and then we get people who want to buy tax liens with their IRA. That's fine. But tax liens are sold how? They're sold at auction. And how are you ever going to satisfy an auction if you don't have access to the funds? And so very often people who will buy things at auction then lose the transaction because they couldn't satisfy the requirements of the auction. All right, if I'm investing on a tight timeline, kind of Aaron's point again, and require anonymity, that does not come up very often, but every now and then we do have a case where the IRA owner wants anonymity. In other words, he does not want the seller of the asset to know he's buying it with his retirement dollars. And, you know, if your name is Fred Smith, but the buyer is Great Lakes Investment Company, he doesn't know that's your retirement dollars unless you tell him. Okay, are there investments my IRA may not make? This slide was not in here before that man asked that question. Am I good or what? Okay. These are called the prohibited transactions. Pardon me. The prohibited transactions. And there are two ways. People say you have to avoid the prohibited transactions. Well, you do. That's true. And oh my God, that's too complex. And anybody tells you it's too complex is, I think Aaron really hit on the button. They themselves don't understand it because it's incredibly straightforward. There are two ways to avoid prohibited transactions. Number one is the one we encourage, and that is give us a call. Tell us what you're thinking of doing, and we'll tell you. Some people say, oh, well, you told me, but I want it in writing. Okay, so we'll send it to you in writing. Okay? How much we charge for that? Nothing. You're a client. Okay? If you're not a client, we charge you. But if you are a client, we do it for nothing. That call, by the way, in most cases takes about 3 to 4 minutes. The other thing you could do is you could learn the prohibited transactions. They're very difficult. Strap yourselves in. Please don't do this at home. Yes, this is a professional. All right. So we encourage you to call. We'll explain them to you. We'll ask you a couple of questions, and then give you a reply really on the same call. I mean, you don't have to wait 3 days for us to figure it out. You'll see. So what are the prohibited transactions? Number one, I cannot use my IRA dollars. You don't have to write this down. You weren't even thinking of doing it. Don't worry. You're not going to do it. Yeah. You cannot use your IRA dollars to pay your life insurance premium or your health insurance premium. Now, let me ask a question. Was there anybody in here planning to use their life or health their IRA to pay for their health insurance premiums? No. You weren't even thinking about doing it in the first place. Don't worry about violating it. You weren't even considering it. Cannot use your IRA to buy collectibles. Is there anybody here who said, oh boy, I want to move my IRA from Fidelity so I can buy a Picasso painting? Maybe there is. I don't know. Maybe this is a very highbrow class. But in general, most people weren't thinking of buying collectibles. Okay? And the last one, the one that people talk about the most, pardon me, is, let me back up. Why does the Internal Revenue Service give you, or give all of us, this big tax break? For one reason. They want us to save for the future. Aaron did not talk about it this time, because it was interesting because I just came back this month. This was our month in Washington, where we go for quite some time, and spent a lot of time with all the people from the House, people from the Senate, and people from the Treasury Department, people from the Department of Labor, and people from the Internal Revenue Service, et cetera, et cetera. And all of them, deep down inside, not deep down inside, out loud, ask the same question over and over. And I've been there every year, and I hear the same questions over and over again. How do we get more people to put money in their IRAs? And how do we get them to invest more wisely? The same two questions over and over again. Okay? Why? Because if we don't save for our retirement, they've got to support us. And there's 320 million of us. Okay? So they want us to invest wisely in our IRA. So they give us this tax break to invest for our future. The third rule. Oops, hello. Your IRA may not invest so that you and your IRA may not commingle funds, goods, or services directly with you. What that says, in other words, is everything the IRA does is an investment for the future. Okay? Inevitably, somebody before the end of the day will say to me, I have a mortgage on my house. Can my IRA pay off the mortgage on my house? And the answer is no, because that's not an investment for your future. That's current benefit. So what they say is you have to use your IRA for investing. That's all they're saying. You have to use your IRA for investing. Then you've got to define what is an investment. An investment is something that's for the future. It's not for now. Okay? It's that simple. Yeah?
I was just wondering what you thought of that new thing that the government brought out called IRA.
Oh, you know what? That's interesting. Can we talk about that later? Because it really won't affect the people in this group, because all of you are way too rich. Yeah. Yes, it's, I can talk about it for quite a while. I'm very familiar with IRA, but it won't affect these people. These are fabulously wealthy people. Yeah.
So I know you're using this as an investment vehicle, but if something happened tragically in your life and you needed to take money out, as far as some of your rent from your houses,
Can you take a distribution from your IRA? You can take a distribution from your IRA at any time, but you can't put it back in. It's not a loan. Once you've taken the distribution, you will incur, it's a taxable event if it's a traditional, or a not taxable event if it's a Roth, and that's it. So the government doesn't say that you have to leave the money in. They let you take the money out. They do want you to leave the money in, and to encourage you to leave the money in, they say if you take it out prematurely, we'll give you there's a 10% penalty. And then they have to define what's premature, and premature is 59.5. So once I'm 59.5, they say, well, at this point, maybe he really is thinking of retirement. It's not premature anymore. Okay, that's all. So there's no restriction. You're not locked in. All they're doing is they give you a tax break, and they're encouraging you to save for your future. Okay. All right. Now, I got to define you. It says You and your IRA may not commingle funds or services directly or indirectly with yourself, right? So, but I have to define who are you? The Internal Revenue Service has a definition of you, okay? Why not? They have a definition of everything else, right? So here we go. You. This is the IRS definition. You are considered you and your linear family. Linear family is straight up and straight down. And your spouse and straight down. According to the Internal Revenue Service, is my brother in my family? You have a second choice on that answer? No. Now, at first, I thought that was a silly point. How could my brother not be in my family, according to the Internal Revenue Service? Then one night at a family dinner, I was talking with my brother, and I realized the Internal Revenue Service is right. We couldn't possibly be related. How could he think those things? I want to invest, make an investment. I want to partner with my father-in-law. Is that okay? Yeah. Not in my family. Can partner with my father? No. All right, that's it. Okay. Yes, sir.
So if I had a separate IRA and I wanted to buy a house, I couldn't buy my grandmother's house.
Your grandmother's house. No, you mean your IRA couldn't buy your grandmother's house. You can buy your grandmother's house, yes.
So my IRA could not.
Your IRA could not. Leave her. Forget about it. What has she done for you lately?
Example of commingling, if you found a nice investment property next to a university and one of the renters just happened
To be your daughter who's moving. I only get this. I call this the August question because this is why I get these questions every August.
My daughter was accepted to the University of Michigan, and I have this great idea.
Okay, and I actually had one person ask me that question and say, "Well, what if I bought it 6 years before she goes to college?" And I said, "Will she still be your daughter in 6 years?" Yes. Well, it's dealing with a family member. You know, no transactions that it's for investment only, and investment only is it's not a benefit to you or a family member directly or indirectly. Okay. You could rent that. Your brother's not in your family. Okay. All right. Let's go on. Let's go. There's always one guy in the room who wants to. Here's my favorite thing. Can I tell you my favorite thing? I stand in front of groups like this. That wasn't bad. I've seen that. I stand in front of groups and I say, can't do this or can't do that. And there's always one guy in the group who raises his hand and says, well, what about, and he's got some plan where I say to my grandfather and then my uncle and then and his neighbor and and what he's describing is got a name. It's called tax fraud, but they go through this whole thing. And what amazes me, is that here's somebody sitting in a room of total strangers with his hand up, proudly announcing the tax fraud he wants to commit, but he knows nobody else in the room. Okay. Your belongings are right now being cleaned out of your room. Okay. All right. So transactions by the IRA that give you current benefit, okay? Because it's got to be an investment. That's all. These are investments, and they'll give you the tax break. That's pretty fair. All right. All right. The important thing regarding prohibited transactions is call the office. You can remember the three things, right? Don't buy insurance. Don't pay for your insurance, I should say. Buy insurance. Don't pay for your insurance. Don't your life or health insurance. Don't pay for your. Don't buy collectibles and make sure it's an investment. Okay. Asset protection. Somebody here yesterday want to talk about asset protection. Okay. The assets in an IRA are the assets in an IRA LLC are first inside of the LLC, and LLCs do have some protection. Single-member LLCs don't have a lot, but they do have some protection. And the IRA, though, the LLC, though, is inside of what? It's inside of a retirement account. Okay, so does the fact that it's inside a retirement account give us any protection? And I always say, I wish I had somebody who would come up, with me right on, like to the front of the room and explain how retirement accounts give you protection. And the only person I can think of is him. Okay. Does that person understand how retirement accounts can protect your assets? Yes, he do. Okay. In 1979, a California jury in civil court awarded a judgment against O.J. Simpson for the double wrongful death of Nicole Simpson and Ron Goldman. The amount of the judgment was $33.5 million to be paid to the decedent's families. How much has been paid to date? 0. Thank you. Why? It's in his NFL retirement plan. Okay. So, retirement plans have protection. Here we go. So, let's do it. Let's say you buy a house with your non-qualified dollars. Remember, non-qualified dollars are the dollars you have in your pocket. Difference between qualified dollars, non-qualified dollars is non-qualified dollars do not qualify for special tax treatment. Qualified dollars, like IRAs, 401ks, do qualify for special tax treatment. You buy a house, kind of looks like that. You can put the house inside of an LLC. And everybody's going to say, put the house inside of an LLC. Well, these are single-member LLCs, and they provide protection, but I can tell you it's pretty limited protection because they're single-member LLCs, but okay, and better than nothing. Inside a retirement account, what happens? But wait, the LLC is behind a brick wall called a retirement account. But wait. If you were to buy a rental house inside your IRA, would you buy insurance on the house? No. So it's behind the insurance policy. But wait. Some of you people that I've spoken with live in a different state, but you told me you're thinking about buying a house in Indiana. Are you going to manage that property? No. You're going to hire a management company. Whose name is the responsible party for maintaining the property? The management company. So as a practical matter, the asset protection is 3 brick walls. Yeah, there's the LLC there, but like I said, single-member LLCs don't have, they're kind of limited to what they can do. There's the management company that stands between you. There's an insurance policy. All that is behind the wall called retirement account. A lot of protection. Okay. Let's go on. Pieces and parts. Self-directed IRA. But notice I changed it a little bit. And I put other things in here. I added hard money lending, tax liens, because what happens is a practical matter. After a while, we talk to this person, and his account will tend to experiment. That's good. That's fine. And I never did a tax lien. I'm going to try a tax lien. Okay. I never did hard money lending. I'm going to try that. Okay. That's fine. And one of the reasons that experimentation becomes so popular, so common, is because of the curse of these accounts. There is a downside. People say, what's the downside? There is a downside. And the downside is too much money. Now that sounds silly. People think I'm kidding when I say that. But I'm not. Why am I not kidding? Because you bought that first house, you bought that second house, you bought that third house. What are they doing? They're paying rent. Where's the rent building up? In the Great Lakes Investment Company. I guarantee you're going to call me. And you're going to say, I've got this money in the Great Lakes Investment Company. I've got too much money to just not do anything with, not enough money to buy the next house. What should I do? And I'm going to say, it's up to you. We don't give investment advice. I can tell you some people lend it out, hard money loans. Some people buy tax liens. Some people buy a trailer, mobile homes. I call them, short on my age, I've been calling trailers for years. Mobile homes. Okay. They don't even call them mobile homes anymore. They call them manufactured homes now, don't they? Yeah. Okay, so the point is you end up with something that looks like this. Go back to Mark and Penny. They just want to add another income earner to their household. And that's all this is. Here we go. Keeping records. I'll do this quickly. Keep records just as you would. People say, oh, what is bookkeeping? I got to do bookkeeping. If you bought an investment on your own with your non-qualified dollars, what would you keep as far as records? You keep track of two things. You keep track of the money that came in and the money that went out. Why would you do that? You want to know, how am I doing? If your IRA buys a house, what do you keep track of? The money that came in, the money that went out. Why? How am I doing? Same exact thing. Flow of funds, very quickly. You'll remember we had this before. Whoops, hello. No, that's good. Pieces and parts, all the money flowed in the IRA. The IRA invested in the LLC. Right? Everything came in through the IRA. Because it's the IRA that has the tax shelter, so we want to maintain that integrity. Okay. You're going to call us up one day and say, I want to take a distribution. I've got all this money in my account. I want $30,000. Okay, fine. The kid who answers the phone, whose name is Kevin, is a very, very nice young man. Doesn't matter what you ask for. He'll say, okay. Ask for anything. Okay. Of course, while he's saying okay, he's also looking up your account. And he's going to, at some point, say, there isn't $30,000 in your IRA. There's $500 in your IRA. There's $600 in your IRA. But we see that your IRA owns an asset called the Great Lakes Investment Company. Is there any money in Great Lakes Investment Company? And you, yeah, I've been buying houses, selling houses. I've been renting houses. I've been doing all these things. Yeah, a lot of money in stuff in Great Lakes Investment Company. And he'll say to you, oh, there's the money right there. Here's what you do. Write a check from the Great Lakes Investment Company to the IRA, not to you, right? Because you don't own the IRA. Goes back to the owner. And then the IRA will write a check to you. So the money goes in through the IRA, out through the IRA, and it maintains its tax status. It's very simple. And we remind you of this over and over and over again, don't worry. Okay. Yep. That's a contribution. Okay. This guy was taking out. You can take out anything you want. Okay. Okay, hello. Understanding fees and costs, very quickly, we're coming to the end, thank God. There's only two costs. There's the setup cost and the annual cost. The annual cost is, I will tell you, that's the important one, because it's the one that you have over and over and over again, is $235 a year. Doesn't matter how many checks you write, doesn't matter how many assets you hold, doesn't matter how many transactions you have. If you have one house, it's going to be $235 a year. Not bad. Mark and Penny, $235 a year. Walter, with a camera hand around his neck, $235 a year. Okay. There's a one-time startup fee. I will tell you this one-time startup fee is $1,295. It's a one-time fee. And some people pay it out of their IRA when they transfer it. Say, I don't have $1,295, but take out the IRA transfer. Some people pay it with a credit card. We don't care. It's check in a box. Just tell us. Okay. How much do I need to successfully start an IRA? We're at the end. How much do I need to successfully start a self-directed IRA? The answer to that question is simple. Tell yourself, I'm only here filling out forms, what are you going to invest in? Okay? I hear it all the time. I had a fella who was in Dallas? Somebody in Dallas? I had a guy in Dallas, last rich dad. Nice gentleman, a nice young man, nice guy. He came to the table, he sat down as enthusiastic as you'd want ever to see a young person. The guy was just wound up. I found the perfect investment. This investment, I said, what is it? He says, it's a 4-flat. And oh, great. And tell me about the 4-flat, and he tells me about it, and he was just glowing, and it's $480,000. great. He had the numbers, he had the cash flow, he had everything. He said, I want to buy it in my IRA. I said, great. How much money do you have in your IRA? He said, $900. So I'll go back to my original statement. Match your investments to the size of your account, okay? Really, folks. Think about it. I say that because it comes up so very often. Okay, but now, and I had this question 3 different times last night, so I want to take a moment with it. What happens if I see the investment that I want and it's $100,000 and everything about that investment works? The cash flow works. I like the neighborhood. I like everything about that investment. I said neighborhood because I'm assuming it's real estate, but it doesn't have to be. But my IRA only has $60,000, okay? And let's not take my IRA. What's your name? Chris? So Chris's IRA has $60,000. He's found this perfect investment, but it's a $100,000 investment. Chris is depressed. He's sitting in the coffee shop downstairs, knows this investment's going to get away. However, talking to, I'm sorry, Mark? Talking to Mark, he tells Mark about the investment. Mark says, I have an IRA. It has $40,000 of investable capital. Can Chris's IRA and Mark's IRA partner? I thought I lost him there for a minute. Yes. Yes. Can Chris's IRA and Mark's IRA partner? Yes, they can. What's the rule on partnering? The rule on partnering is you have to partner at the beginning. Okay? And the example I always use is when you think about partnering with IRAs, you always think about 2 people standing, or 3 people, or 4, or whatever the number is, standing on the edge of a pool, holding hands. And they have to jump in together. Okay? So an IRA's partner, they partner from the beginning on the investment. Okay? So now Chris has 60% of his IRA has 60% of this investment that he really wants. Should be pretty happy. So now Chris is talking to Mark in the coffee shop, tells him the story, and says, Mark says, I don't even have an IRA, but I do have $40,000 of investable capital. Can Chris's IRA and Mark's non-qualified dollars partner? Yes. Okay. Are you beginning to think of people that you might partner with? Because you should be.
I have a question.
Hold on. Chris is sitting in the coffee shop with his $100,000 idea and a $60,000 IRA. Mark doesn't sit down next to him because Mark has gotten pretty sick of Chris. Every time I sit there, the guy wants $40,000. He walks past Chris, I should say. But Chris says, you know what, I personally have $40,000 of non-qualified dollars. Can Chris's IRA partner with Chris the individual? Yes. If they do it at the beginning, right? If they do it at the beginning, if they are standing on the edge of the pool, holding hands, and they jump in together. Once Chris's IRA owns the property, the IRA, probably his personal dollars cannot invest. Once he owns the property, his IRA cannot invest. If they jump into the pool together, they can invest. Okay. Yes. However you're structuring it. Most people, when they do that, are structuring it one investment at a time. But you could structure up a group of investments. That would be a little more complex to do. Okay?
You have 2 separate single-member LLCs. Right. You wouldn't have an LLC that had multiple members.
Yeah, I would probably keep them all separate. I want to leave a nice clean trail. Yeah. Yeah. Was that a question? No, it wasn't. Okay. All right. Okay. So that partnership thing, if we do nothing else, should be opening your mind to literally endless opportunities of making your dollars work. I have one person, I actually have an account, they have an asset here, that is 12% IRA and 88% personal. I mean, it's a peculiar number, but we do it. Okay. If you'd like to have a one-on-one session, everybody filled out the, wrote down their name, and don't ever talk to me again. Okay. Thank you very, very much for your time. Thank you.